Good morning, everyone. I'm Giles Boucher, Claims and Risk Control Leader for Cross Insurance, and I'd like to welcome you to the latest installment of our Cross Insurance Risk Management Series. Today's topic is the recently enacted Federal CARES Act and what it means to employers and employees. At $2.2 trillion, this is the largest stimulus program in U.S. history. So given the significant impact this aid package is expected to have on businesses, especially small businesses, we felt this would be an important topic to discuss with our clients who are directly impacted by this program. I'm pleased to introduce our guest speaker today, Roxanne Emond, Managing Director with the accounting and advisory firm Tonneson and Company. Roxanne is a CPA with a particular expertise in tax accounting. She's been following the development and implementation of the Federal CARES Act, and we're privileged to have her with us today to share her insights and guidance. In today's presentation, we'll discuss key elements of the CARES Act, such as the Payroll Protection Program and related tax credits. We'll also review a few other provisions of the bill that are relevant to businesses. We gathered questions from the audience earlier, and as time allows, we will address some of those specific questions at the end of the discussion. We will also share the presentation slides with the participants after the presentation. The chat function is available if you have any specific questions as we're going through this today, and we'll do our best to respond either at the end of the presentation or respond directly to your email address with an answer. I would like to now turn this over to Roxanne to describe and walk us through some of the key elements of the CARES Act. Roxanne, the floor is yours.
Thank you. I want to thank Giles and Cross Insurance for reaching out to Tonneson and providing us with this opportunity to discuss some of the relief programs available to businesses by the Coronavirus Aid, Relief, and Economic Security Act, or the CARES Act. As Giles mentioned, the CARES Act is a $2.2 trillion aid package, and it's meant to make a significant impact on the economy by providing loan forgiveness, supporting small businesses, enhancing unemployment insurance, and providing federal loans to industries severely impacted by the pandemic. The CARES Act is the most expensive piece of legislation ever passed, and another round of relief is already being discussed. Of all the programs, the Paycheck Protection Program, or the PPP, has gotten the most attention. While everyone's particular set of circumstances are different, for many businesses, this program is going to be the one that will provide them with the most assistance, as well as providing the financial help that businesses need right now. The opportunity to potentially have the loan forgiven is, of course, the benefit with the biggest potential impact to a small business. The PPP, at its core, is an employee retention program. It's meant to provide businesses with the financial help they need to keep their employees paid during the pandemic. This obviously helps the individual employees by making sure they continue to receive a paycheck, but it also helps businesses retain their current employees so they'll be well positioned to hit the ground running when they are able to open up their businesses again. The loans are being administered by the Small Business Association and are guaranteed by the full faith and credit of the United States. The program is intended to help small businesses that have fewer than 500 employees on their payroll as of February 15th. There are certain industries where the fewer than 500 employees rule is not required. Unfortunately, that's beyond what we can cover today, so I'd encourage you to be looking for any guidance that may come from your particular business's trade association or your own tax advisor. Businesses can borrow up to 2.5 times their average monthly payroll costs for calendar year 2019, and the loans are capped at $10 million. Businesses that are seasonal will have to look at different time frames, and we'll discuss that a little later. For now, we're going to walk through some of the mechanics of the PPP. A big topic of discussion that we've been debating has been, what do they consider payroll cost? Payroll costs are defined in the law, but mostly in broad terms, which weren't always helpful when you were trying to calculate exactly how much you could borrow. The SBA did provide an information sheet which outlined what specific costs could and couldn't be included in payroll cost. Wages for any one employee are capped at an annual salary of $100,000. It's important to note that the cap on wages is specific to the gross wages the business pays any given employee. The cost of any benefits provided to an employee is on top of that $100,000 wage cap. As you'll see on the slide, it includes some of the most common benefits provided to employees, like health insurance and retirement benefits. Also note the slide highlights what costs have been specifically excluded in the calculation of payroll cost. How do you apply? The application is made through an existing SBA approved lender. If you already have a relationship with a lender, find out if they're participating in the program. If they're not, you can go to the SBA website where they provide a list of current SBA lenders. If you have covenants to be met under any existing loans, talk to your lender to be sure the PPP loan won't violate those existing covenants. You could also consider discussing the potential of a waiver of the covenant if necessary. The loans are on a first come, first served basis. The last day to apply is June 30th. However, there is a funding cap, so if you haven't already reached out to your lender, I'd encourage you to do so as soon as possible. What types of information are you going to need to provide when you apply for a PPP loan? So far, our experience has been that banks are providing detailed lists of required documents on the applications, but we're going to highlight some of the more common items the lenders are requesting. They may ask for your 2019 Form 940. That's your annual federal unemployment return for those of you who don't have all your tax form numbers memorized. Or your Form 944, the annual return that reports your payroll tax liabilities and payments to the IRS. You may also use your quarterly 941s, which reports employees' income and various payroll taxes. If you use a payroll vendor, you should have access to payroll reports, which outlines the gross wages, paid time off, and other types of compensation that may not be included in gross wages. You should also have available any state and local taxes that are assessed on the wages of your employee. An example of this would be the unemployment insurance amount you pay to various states. As I mentioned earlier, a seasonal business will need to calculate their payroll costs in a different manner. Those types of businesses will use the 12-week period beginning either February 15th, 2019 or March 1st, 2019. If your business is new and it wasn't in business during those dates, you'll use January 1st through February 29th, 2020. Other documentation you'll need will be the insurance premiums your business paid for for group health benefits during the same period you were using to calculate the wages. You'll also need to provide documentation of any retirement plan benefits made during that same period. The amounts for both the group healthcare benefits and the retirement plan benefits are for the portion paid by the employer only. Any amounts withheld from an employee's gross wages aren't included. You may also be asked to provide a copy of a master payroll report from your payroll vendor. If your business pays independent contractors, they are not included in your employer payroll calculation. If you're a sole proprietor, you'll be asked to provide 1099s and likely a copy of your Form Schedule C. We anticipate additional guidance from the Treasury and/or the SBA soon. The SBA has said that all loans will have the same terms, and the terms are very favorable. It's for 2 years with an interest rate of 1% with no fees or penalties. You don't have to provide any collateral or personally guarantee the loans. The principal and interest can be deferred for up to 6 months. but interest will accrue during the deferral period. And the most beneficial part of the PPP is the potential for the loan to be forgiven. When you apply for forgiveness, you'll have to demonstrate how the money was used. At least 75% of the loan must have been spent on payroll costs for the 8 weeks following the date of the loan. The loan forgiveness will be reduced if employees are laid off or wages of any employee making less than $100,000 a year are reduced by more than 25%. The CARES Act indicates that the employee count is measured using the average number of full-time equivalents, or FTEs, per month, calculated for each pay period falling within the month. The Act does not state how the FTE will be calculated or defined. This guidance is still forthcoming from Treasury. We anticipate clarification from Treasury or the IRS within the next few weeks on this, as well as some other provisions of the Act. The principal will be forgiven, but we don't have final guidance on whether any accrued interest will be forgiven. Normally, when a loan or debt is forgiven, it's considered taxable income. However, one of the provisions of the PPP is the amount of the loan that is forgiven will not be taxed. Right now, that's true for your federal taxes, but we don't yet know how each state will treat the loan forgiveness. What can the funds be used for? Of course, the biggest piece is wages, but you may also use a portion of the money for any mortgage interest, rent, or lease payments, and utilities. In order for these payments to qualify, they must be used for a mortgage that was incurred before February 15th, a lease that was in force before February 15th, and utilities which were in service before February 15th. You must not spend more than 25% of the funds on these non-payroll costs in order to qualify for the loan forgiveness. If you're not able to obtain a PPP loan, the SBA does have other loan programs available. We've noted a few of the different programs on the slide. We've provided some basics regarding the other loan programs, but if you're interested, you should contact the SBA. They'll be able to provide the details on how to qualify and apply for each of the different loan programs. The CARES Act also makes available an Employee Retention Payroll Tax Credit. This is another program meant to help small businesses retain their employees. This program allows an eligible employer to claim a refundable tax credit against their payroll taxes that are equal to 50% of the qualified wages paid to an employee after March 12, 2020 and through December 31st, 2020. The credit is capped at $10,000 per employee. What do they mean by qualified wages? That definition is going to be different based on whether or not the business averaged more or less than 100 employees in 2019. If the business had more than 100 full-time employees, the qualified wages are the amount paid to an employee who did not work and was not paid during the calendar quarter due to a furlough or layoff during the 30 days immediately preceding the period of economic hardship. If a business had less than 100 employees, the qualified wages are the wages that were or would have been paid. The employer gets the credit whether the employee works or not. In order to qualify for the credit, a business would have had a full or partial suspension of operations under a government authority due to COVID-19, or they saw a significant decline in gross receipts. Significant decline is determined by comparing one calendar quarter versus the same calendar quarter from the prior year, and that decline is more than 50%. Once the gross receipts for a given quarter is above 80% of the prior year quarter, a business is no longer eligible for the credit at the end of that quarter. The credit will generally be applied to a business's quarterly 941s. If you're claiming any payroll tax credits under the Families First Act, this credit is reduced by the amount of that credit. This credit isn't available if you have a PPP loan. Businesses also have the option of delaying the payment of the employer portion of payroll taxes. If you have a PPP loan, you're not eligible for this deferral. The program allows an employer to defer the payroll taxes that were incurred from March 27th to December 31st, 2020. The first half would be due by December 31st, 2021, with the remainder due by December 31st, 2022. And these deferrals are free of any penalties. The CARES Act includes some additional provisions meant to help businesses. You'll need to discuss how or if your business can benefit from any of these provisions with your tax advisor. Some of the provisions include the ability to use any net operating losses have been expanded. The deduction for business interest expense has been increased from 30% to 50%. And it also includes a technical correction from an item not included in the Tax Cuts and Jobs Act. Businesses with qualified improvement property, such as leasehold improvements, they're now able to qualify that property as 15-year property, which also makes it eligible for 100% bonus depreciation. So we did want to address some of the questions that we previously received from some of the participants. We are a 501c6 nonprofit, so we are not eligible for the Payroll Protection Plan. We are contemplating a partial furlough. Our employees will file for mass unemployment for the amount of the salary that they lost. Will they be eligible for the $600 per week federal stipend, or does the amount get prorated by the percentage of their reduction? In other words, if someone lost half their salary, would they receive only $300 per week? The U.S. Department of Labor has issued an advisory which clarifies the additional $600 unemployment benefit. If any individual is eligible to receive at least $1 of state unemployment benefits, they will receive the full $600 payment under the Federal Pandemic Unemployment Compensation Program. Another question was, with regard to PPP loan forgiveness, can you please say exactly the definition of an FTE? Specifically, how are interns who are paid a small stipend through payroll counted? The CARES Act indicates that the employee count is measured based on the average number of full-time equivalent employees per month calculated for each pay period falling within the month. Unfortunately, the Act does not state how the FTE will be calculated or is defined. This guidance is still forthcoming from Treasury, and we anticipate clarification from Treasury or the IRS within the next few weeks on this and other provisions of the Act. We also received a couple of other questions in advance that were perhaps better answered individually. So if your question was not answered today, watch for an email back from us. Thank you for your time, and we hope that this presentation has helped clarify some of the main provisions of the CARES Act and what it means for your business. And thank you again to Cross Insurance for this opportunity.
Thanks, Roxanne, for a great explanation of this important program. And we packed a lot of information into this, and the slides will be made available. I think the slides did a great job of summarizing a lot of the key points. So I want to say a sincere thank you on behalf of Cross Insurance for speaking with us today, Roxanne. What a fantastic explanation. I also want to say thank you to our audience for taking the time to participate. We will gather any unanswered questions that might come into the chat room during the presentation and respond directly to you. And like I said, we'll also share the slides, so you'll have those as well. I know everyone is incredibly busy. We try to keep a very close eye on the time that we're using. So, you know, through the new reality that the pandemic has brought to us, we want to really say thank you and appreciate your time today. And we look forward to speaking again at an upcoming risk management seminar. Thank you and stay safe.